Josef Schuster, founder of IPOX Schuster. Good to see you. Good to see you, Joseph. Let me start with this. The whole iPhone thing, the whole bit, I just talked to Mark about that. I mean, what did you think?
Well, I think it's quite positive. I think it underlines, as always, like news flow in Facebook. So I think it's quite positive and exciting.
I mean, you say it's positive, but I can tell you the stock hasn't done well recently, and there are a lot of analysts that are quite skeptical. Why is that?
In the market, it's a tough period right now. Volatility is high. Obviously, there have been huge winners, Apple, Facebook, and so forth. And there's some selling going on. I think macro factors really drive stock prices right now, not really individual fundamentals right now.
We know what a big part the tech world has been for not just the markets, but also job creation. And a part of that is all these IPOs that we talk about often on this show. And I'm wondering, from your standpoint, where do you see technology going into 2016?
Again, tech IPOs will be a relatively big part of the IPO basket, which is going to come out. I think First Data had announced today they want to raise $2.5 billion. So it's going to be strong. However, pricings are going to come down due to the high volatility, which should eventually, over 2 to 3 years, I think, makes for an interesting investment case in some of those companies. Because obviously in the last few months, or maybe the last half a year, some of the valuation really were out of touch.
Well, I'm not going to go over all the names, but companies like Uber and tech companies that have gone public, and I even include Alibaba in it as well, but a lot of people have said, hey, the pricing they're doing on these IPOs is so high, it reminds them of 1999. I don't have to remind you what happened in the year 2000, but some are basically claiming that there's a bubble going on in technology.
There's not really a bubble going on in the tech valuations. I think the Nasdaq in 2015 is very different than the Nasdaq in '99. I think the bubble tendencies are more like in the biotech area, where obviously no valuations metrics is really are used at all. I mean, those companies only trade out of expectations. And obviously, these are the stock market traded companies, and then we have the pre-IPO kind of valuations, which are high, but obviously these are very illiquid markets, and obviously sometimes when those companies start trading, valuations come down substantially. Hence Alibaba, hence Facebook. You could have bought both companies much cheaper now, or like at some point in the aftermarket than at the IPO price.
It's interesting, and when we talk about trends in technology, oftentimes there's people like us and pundits out there who will say, well, that's not a big deal, or that's not a big deal, and it really does become the next hot thing. So my question is, what's going to be the next big thing in 2016?
Very hard to say. I wish I could tell you a good answer. I think there are a lot of interesting specialty companies out there in the healthcare business. Healthcare is doing well. I think it's going to be an incredibly growing part of the global economy in the US, in China, in Europe as well. So specialty healthcare, always interesting. But for investors, I believe the key is really to be diversified, to probably do a little bit dollar cost averaging, to really take down leverage. And I think that will really help you to make very good returns in some of the deals. But diversification is the key.
All right. Thanks for helping our newsroom make a little better investment decisions. Joseph, thank you very much. Here are some other